There are always two sides of a coin. I mean, effectively, I would say no. The market is not too hot. Yes, financing is cheap, but there aren't that many banks available anymore to offer attractive financing. The market is still alive and healthy, but obviously competition is nowhere close to what it used to be in the years obviously prior to 2008. So financing is an issue. If you look at purely prime properties where you're looking at LTVs of 50%, with 10-year plus tenancy agreements with good tenants, there are a lot of banks available to give you money. But if you move away from that area, it gets quite tough. So there's a bit of yes and no depending how specifically you define the market. But on the supply side, it's an issue. It's difficult to, if you look at the core plus, or as we call it, prime location. Although in our instance, to be fair, when we define prime office or prime properties that we would consider to buy, it's not always downtown particular cities. We want to invest in the 7 to 9 largest cities that were up on the screen there. But they're not always in downtown locations. They can be in B locations in an A city, but most importantly, it has to be a good quality building and a good quality tenant, obviously. So if 2 out of those 3 criteria match our definition of prime, we would invest. And it's not easy to get those type of properties. So supply is an issue. The demand is there. So it is obviously pushing up prices. But is it overheating? No. And do I see a bubble on the office supply? Definitely not.
Yeah, I would agree with Alex. Certainly, you can feel the heat in some location. If you go into a city in A locations and you have competition with foreign investors. So for union investment there, it's too hot. So what we have a look is also at B cities and A locations, and we don't go for ridiculous pricing. However, our clients are more interested in cash protection or value protection in properties. We are not working on the core plus side or value added or even opportunistic side. So our investors have very core interests in real estate, and therefore we find properties. So I think we did 800 million of acquisitions this year in Germany plus. And so we find properties, but competition is quite high. I agree on that.
What have you been mainly buying? What were those?
Retail and office. And hotel. So okay. we are a strong believer in budget and economy hotels in Germany because it's an improving market. So there is only some 8 to 10% budget and economy hotel actually in Germany. So we see this growing in the next years.